Hello, I'm John Kreitler. Welcome to the Macro Minute, the economy and the markets. Trade deficits, what to be made of them? Let's take an example, Vietnam, United States. Vietnam, though growing, is exceptionally poor relative to the United States. Vietnam exports certain goods to our country. They're made cheaper than we can make them here. By doing that, we're paying with US dollars for these services and goods. What does Vietnam do with those US dollars? That's surplus. They basically recycle it back to us in terms of buying US treasuries, buying in the United States stock market, and other services within the United States, financial services or such. So in a way, it's a cycle of US dollars back to the United States with that excess. Would it be nice if some of that manufacturing for Vietnam came onshore to us for many reasons, geopolitical and also post-COVID concerns in terms of supply chain? Of course. And some may be. But there's just certain things that are going to be made cheaper and more efficiently in terms of expense in Vietnam versus the United States. That needs to be understood that an equal playing field does not necessarily mean equal in terms of imports and exports on both sides. Those excess dollars will come back to the United States in terms of our debt and funding of that, U.S. Treasuries, United States stock market, or other capital goods within the United States. That's important to remember. I'm John Kreitler. This was the Macro Minute. Have a good week.